Welcome to Boots Off, Log On, a podcast where we talk all things farm business. A show about the business of farming, bringing you insights and wisdom from the leaders in farm business, helping you minimise risk and maximise return on all your hard work. I'm David, and I'll be your host for the show. So welcome to Boots Off Log On, Rob. Now, I just finished rereading your old book, Accounting Practices Don't Add Up. And this is probably, I don't know, is it one of your first books you wrote, Rob, back in about 2001 or so?
2011. So I started my career actually in Dubbo, working with accountants in 1994. So when I was 24 years old. And I've stuck with them ever since for 28 and a half years, worked at 18 countries, trained about 200,000 accountants, coached about 650 accounting firms directly, various products, various companies in that time frame. But yeah, my whole life, essentially my professional career has been accounting firms.
Yeah, definitely. Now, this is a really good point before we get going, Rob. So you are probably one of the leading coaches for accounting firms. And like you said, you've coached thousands and thousands, but you don't come from an accounting background, do you?
No. So left school when I was 16, so not a piece of formal paper to my name. And I literally fell into the market. So I was running a series of customer service seminars in Dubbo, of all places. And this big seminar of the day at the Amaru Hotel in Dubbo, if there's any Dubbo people listening, 8 people in the room, really rocking it. And there's an accountant in the room called Ellis Ryan. And Ellis since passed away, but he was from Coonamble. And Coonamble is about 2 hours north of Dubbo. It's a 2-accountant town. He says, I want you to come to my town and do this seminar for my clients, a little value-added seminar on customer service. I said, sure. How many clients you got? He's got 126 businesses in and around Coonamble. And I said, okay, here's how it's going to work. We did a little marketing campaign. Sure enough, 56 people turn up to the Coonamble RSL Club in May 1994. Wow, and I make a profit of $2,500, right? I thought, wow, I can't fill a room, but these accountants can. I'm going to accountants through accountants. So that's how the journey started. And 28 years later, 18 countries, a couple of thousand speeches over the years, still with accountants. Yes, that's how it started.
Yeah, definitely. Now, your message, because you have that perspective of not being an accountant and sort of almost being an observer rather than, better get too in the weeds. And one of the things I like is both in your writing and in your speaking. I saw you speak in probably 10 years ago. You get straight to the point. About that. And so what do you believe that the value, you've obviously been quite successful in your career into accountants. Does the fact that you haven't been an accountant give you an advantage, do you believe, in the advice that you give?
I think there's a couple of things there. One, because I don't have a formal education, but I've got, I've read over 500 business books and countless seminars and events, and Street Smart's application of that. So there's that piece where I look at the accounting firm from a business point of view, but also not being an academic, I look at it as, okay, let's go for hard and fast research here. What does this one firm do that really rocks? Out of 100 things they could do, they do one, right? So what does this other firm do that really rocks? What's this other one do that really rocks? Let's put them together and there's some content. If you did this and that, this is the sort of results you would get, because there's not one perfect firm, although my book about 5 years ago is called The Perfect Firm. It doesn't exist, right? There's not one perfect firm out there, but the collection and immersing myself in that one industry or profession enables me to get a helicopter view of, I go, what works, what doesn't work. Just go and do this and it'll work.
Yeah, so Rob, in that time since you first started those seminars way back, your accidental successful seminar,
yep.
So that's 20 plus years. So you must have seen a lot of changes in the industry in that time. So what are the biggest changes you've seen in the industry, especially the ones that have knocked it out of the park?
Look, the biggest one has to be the technology change. There's still humans involved. There's still some bad habits and bad mindsets within the profession, but the technology, has crept up on the profession, enabling loads of efficiency, the opportunity to remote working properly, and COVID was a big push to that, of course. The opportunity to have, team members overseas, offshore, outsourcing operations, the tech has changed the landscape for delivery of accounting services. But the thing that they haven't capitalized on is what the tech can do for them to help their clients. And if I look at one consistent message I've had over the time I've been on working on the profession, is that, you're there to serve your clients proactively, not reactively, and the vast majority of accounting firms reactively serve their clients. And COVID was the biggest reactive service I've ever seen. Pandemic hits, right. And it wasn't being proactive because of the pandemic. It was reacting what the pandemic did to them and their clients. We should start communicating more and run, info sessions and more newsletters and phone calls and touch bases. Yeah. Why did it take a pandemic to force you to do what you should have been doing for 20 years? Right. So there's tech has been the biggest change without a doubt.
Yeah, is the tech a double-edged sword though, Rob? So, obviously there's this rush to, automate everything, which nobody wants to do the grunt work. But is there a downside to relying, does it hide a lot of sins, the tech sometimes?
Oh, you bet. So when I started, here's a good one. When I started working with accountants, the accountants themselves, the people doing the work, had to think about the client situation, right? Because it wasn't automated, it had to be keyed in, it had to be in some cases handwritten, a form needed to be filed or whatever, and it was very clunky. And consequently, they used to think about the clients a lot. Now the technology is taking a lot of the thinking about the client situation away because it just automates the thing. So I think we use the tech for that, but we need to bring the thinking back into accounting, not just the processing.
Is there a risk of just using the tech to have a lowest cost base race to the bottom as opposed to a service race up to the top?
You bet. Plenty of firms have done that. They've used the tech, got all their clients on a cloud accounting system, all the connections on the receipt bank, or what it's called Dex these days, and Expensify, and those things are connected. So the bookkeeping and the compliance efficiency is definitely there. Then they'll say, well, let's get our labor force in the Philippines and we can get that for a quarter of the cost. Let's bring down the cost dramatically. And hey, presto, we've got a low cost accounting firm. And that is a business model that does survive, but it's not a very good one, I don't think.
So you're saying survive. You didn't say thrive. So what's stopping them thrive, Rob?
Well, I think it's a belief that everyone agrees on. Every partner I've ever met, not one partner with what I'm about to say disagrees with a statement, but the implementation of the statement is completely different. So I'll ask you, 100 accountants in a seminar or a webinar, whatever it is, who believes in the following statement? And the following statement is that, it is the success of your firm is all about you helping your clients achieve their financial goals. And to me, the duty of care is that all clients should be buying all services that they need from the accounting firm that helps them achieve their financial goals. And I said, do you believe in that? Do you believe you should be providing services to your clients that helps your clients achieve their financial goals? 100% yes, all the time. Not a question. There's no doubting the statement. Yes, we believe we should be providing a range of services that helps our clients achieve their financial goals. And so it's not the theory, it's the implementation. And the implementation of it means that the client is properly served. So the low cost accounting firm's not doing that. They're just providing a grunt service. But the firm that has a deep-seated concern, duty of care, wants to build a great relationship with their clients, they should be providing services that help the client achieve their financial goals. Now, they may not be providing those services direct. They may have an alliance and affiliate type deal with a provider, but they sit at the center of the relationship because the accountants of this world are a force. There's not an industry in the world that I know of where every business client has to have one.
Yeah.
Right? Think about it. Everyone individually, as a personal income tax return, they're getting abolished around the world, and you can do it yourself online, all that sort of stuff. So you don't need an accountant unless you're a high net worth individual. But as a business, you need an accounting firm to sign off on your annual accounts if you need an audit, to sign off on the audit, whatever. So every business in the Western world needs an accounting firm. What an awesome opportunity. What a great relationship building opportunity, and a great money making opportunity to help the client properly make a lot of money off it. But they just don't do it.
So, we were talking before, and I've worked with accounting firms for many years, like you, but in a different context. And I always walk in and go, "Wow, you're leaving a lot of money on the table. There's a lot of extra services you could be providing." So Rob, tell me, why are accounting firms tend to be leaving so much opportunity on the table? Why do they struggle to move from that low-cost compliance type, I suppose, crutch? I don't know if it's the right word, through to this higher-end advisory, if that's type space.
Yeah, and I want to make sure we define the advisory services as well, because in my 28 years, my tone and tune has changed a bit on what they should be providing. So I want to come back to that, right? So first of all, they believe in the idea all clients should be served properly, buying what they need, help achieve goals, right? That's the belief. And the services needed might be cash flow management, it might be wealth management, proper tax minimization, all the things that are there. So that they can do. It's not that they can't do it. They may not have a financial planning license or a legal arm to their firm. Some do, but they know people that they can refer that out to, right? So they still hold the relationship. The challenge is they're too busy reacting to so many clients, they can't get out of the way. The profession has succeeded very well, I might add, right, on partner compensation, on growth rates, succeeded exceptionally well by just reacting to client situations, reacting to a pandemic, reacting to governments changing the rules. And what happens is, because the profession as a partner earnings are so solid, very easy to make $300,000 or $400,000 a year profit per partner, and they get comfortable with that. And comfort breeds apathy, right? I'm comfortable. I've got kids are in private school. I'm not living a lavish lifestyle, but I've got a nice home. I've been making good money for many years. I've got a nice couple of cars, kids in private school, nice home, nice lifestyle. I can take some time off. I'm not working my butt off. I can have a holiday, and comfort kicks in. But comfort kicks in, and this is, by the way, as a provider of services that help accounting firms thrive, make lots of money and reduce their time. This is my number one competitor. My number one competitor is the partner's apathy for change. And this reactiveness, right? Phone calls, better deal with it. Email comes in, better deal with it. Government changes the rules, better deal with that. Pandemic hits, better deal with that. And a team member walks in, better deal with that. So they're reacting all day, every day. And they've set it up in such a way, inadvertently, that reaction, builds comfort, builds apathy. We build a reasonable lifestyle, but it's not wealth creation. So the more ambitious the partners are for true wealth creation out of this vehicle as accounting firm, the better they will do. The better they'll get on the front foot, be proactive, meet with clients, understand where they're at, understand their goals, and service them properly. So it's a combination.
You mentioned somewhere, I can't remember whether it was in a book or a website, Rob, that you had your I think it was your 12 or 18 values or that you aspire to. One of them I like was, and I'm probably going to get it wrong here, Rob, but there's one line I liked, and that's I first have to be the version, essentially the type of business that I'm trying to get my clients to be. In other words, you have to be an example. In other words, you can't be running a rubbish business and advising people how to run a great business. Yeah,
correct. So again, going back to the, I personally believe accounting firms should be and can be the primary business advisor, right? So not always the business advisory deliverer, but because again, every business is connected to an accountant. You have this strong relationship with the partners and the firm. Then that becomes a responsibility, right? It's a duty of care to provide the right services, but also if you are going to start advisory services on how to run their business, be more efficient, make more money, whatever, then make sure you're doing it better than them.
Yeah.
because otherwise it's like the painter with the worst painted house, and the client can see through it. So, and this is why we always start when we coach a firm. Let's sort the firm out first before we roll out some fancy new services. So you can prove on, and then they can hang out on say, well, this is what we've done, and this is what worked for us. Maybe it could work for you.
And does this comfort actually, in a way, become a problem for clients? In other words, so I'm a partner, I'm comfortable, I'm earning a really good living in the context of the rest of the country, etc. But my client saying, well, why isn't Rob giving me help with my cash flow? Why isn't Rob helping me because I'm struggling with this? Does that make the client go, well, they're not helping?
The client misses out here, David. They're the one that misses out. So here's a really good example, right? We call it finding opportunities, and we have a 100% success rate of this strategy. So we get a small team of 3 or 4 accountants, end of year set of accounts that they've just finalized, a couple of months after, and we give them a process of how to find potential projects, opportunities the accounting firm could deliver to the client. It's called Find Opportunities. And it's a 15-minute brainstorming exercise. And it's a very specific process of what they need to look for, but it's in the profit and loss and the balance sheet. And so accountants get around, and one accountant who knows the client explains to the 2 or 3, this is where they're at, this is what they've got. The next part of the puzzle is the other 2 or 3 around the table, ask questions, and say, well, what about this? What about this? What about that, right? We have a 100% success rate over hundreds and hundreds and hundreds of client files of accountants finding opportunities, potential projects that would help the client.
Yep.
But they don't do it.
And are they the simple ones, Rob? Are they
simple
things
stuff,
like, are they like cash flow management and
100%, right? Oh, okay. Well, why is their profit down a bit and their inventory or stock is up, or their margins are down a bit, their gross margin, and the cash balance is down, and their receivables are up, and their payables are up? That says they might have a cash flow problem, but the client doesn't know it, right? So, and to an accountant, because again, go back to the thinking has gone out of the profession because of the technology and so busy. This little exercise, 15 minutes, and then go back to the client, brings the thinking back. And it's simple stuff. It could be a restructure. It could be a expense reduction plan, a cash flow process of, expenses and efficiency, inventory, work in progress, and or accounts receivable. Okay, let's look at those 3 and help the client with the cash flow management process.
So a lot of people go, oh, I'm too busy. I've walked into hundreds of accounting firms, and on the door, they'll have, normal stuff, tax, compliance, audit, etc. And then they'll have business advisory. And I'll ask, okay, can I talk about your business advisory? Oh, we haven't done that yet, right? or we have a superannuation management person in the building, or etc. So, like you said, everybody knows what they want to do. They know it's always on the website, and it's always on the front door. So there must be some practical challenges to actually offering those services. Are they just too busy and don't want to carve out the time? So how do they make that first step to move to where they actually want to go?
Well, first step has to be a desire to want to, and again, if you're at comfort level at, call it 350,000, in the US, I just did a benchmarking survey, and the median result was 420 grand profit per partner, median, right? And on that, you live all right, right?
Yeah.
They're quite frugal. So first, is an absolute desire that you want to change your personal circumstances, right, as a partner in an accounting firm. And I believe it starts with the partners, not with the clients. It ends with the clients, but it starts with the personal desire of the partners. Do we want to ourselves run a better business that's more profitable, that it gives us more lifestyle, more enjoyment, and helps us to create wealth, right? True generational wealth. Because at the end of the day, the asset itself is there. You may or may not be able to sell it, but there's a lot of cash flow availability by running a better firm. So one's desire, right? Desire. Yep, we all agree. We want to get to $1 million profit per partner, or whatever the number is. Then we need to change some things. Then it's practically coming up with strategies to change the dynamics and the way they work with their clients and the firm and the team members. And one of them is what we call a gap meeting, GAP. And the GAP meeting stands for Goal Achievement Process. And so we hold them accountable to how many of these they do every month. It is effectively a sales meeting. It's a simple meeting. We teach them on how to do it by Zoom or face-to-face. And it's a really enjoyable meeting because it's a meeting talking about the client's current situation, going deep into their current situation, off balance sheet, off P&L, so into other aspects, understanding where they're at, then saying, okay, well, let's talk about it, where you want to go. What are the goals you've got? Because here at XYZ Partners, our objective is to help you achieve your financial goals. And I'd love to do this and retire by that and sell this and achieve this and buy this or whatever. Out comes a list of goals. Then, so this GAP meeting process, which is central to client communication, one of our sole partner firms, absolute rock star, this guy, did 420 of these last year. As a sole owner with about 20 people, because they don't have to be an hour, but they could be. He has one on every single meeting. At the end of every meeting, and he tells about 420. And so, as a result of this, at the outset, it is a beautiful meeting to talk about. I get, as a client, to talk about me the whole time, right? I love talking about me, right? Every client loves talking about themselves, right? This is where we're at. This is where we want to achieve. But secondary to that, so the client loves it. Secondary to that, there's an opportunity for the partners to, sniff out potential projects that they can help them with. And so they may not make a sale out of that, but they might do later on. But they might say, look, based on where you are now and based on where you want to go, what we need to do is help you do this. Otherwise, you're not going to get there. And I actually learnt this from an accountant doing it on me many years ago.
There you go. Is there a fear sometimes that, look, we have, there's so many industries accounting firms deal with, anything from manufacturing to retail, and in our case, they're dealing with farmers. Is the fact that they are not technical experts in those fields sometimes
it has to be. So this is the drawback, right? So this is the big drawback as to why they're hesitant to do it. And it is because accountants have been taught to know the answers to everything. And if they don't know the answer, they won't pose the question. They don't like posing questions where it's a big black abyss and they can't get out of it. Where instead, if you think of, because knowing the answer to everything is when you've got your consultant's hat on, right? So the consultant or the primary advisor says, righto, I'm going to ask questions about this because I know if they've got that, I can help them do that, right? That's the consultant. Instead, they have to play coach. They have to play coach role, which is not knowing the answers but asking great questions where the client might come up with the answer themselves, or they can go and think about it and research the answer. They don't have to know the answer straight away. And accountants have been very guilty of just blurting out the answer straight away on a situation and not getting paid for that. And so, and not only that, not even really adding value, but I've done my job, told the client what they're going to do, hopefully they went and did it. So they have to switch from, I need to know the answer, which is consultant role, right, to I'm going to ask great questions and let the client find the answer or get them to think about it, or I can find it later on, which is coach role. And that's the switch they have to make here. Otherwise, they'll get their knickers in a knot and they won't go down the rabbit hole of an industry sector or a strategy base, a strategy idea, because potentially we don't know what the answer is.
And that's the thing. So do they feel like that the client won't like it if they say, hey, Rob, that's really interesting. I'd love to find out for you, but I don't know, but I'll get back to you. Whereas the client will be, that'll be great. But they feel that, yeah.
And I'll get back to you in writing with a proper implementation plan on strategy on how we're going to help you achieve your goals. But just remember as well, let's say a GP accounting firm who doesn't specialize just in agribusiness, right? They've got 30, 40, 50, could be 100 different business types in their portfolio. There are common denominators in every business. You don't know nor you need to know how they make the product, how they, resource their people, how they train their people, the intricacies of the formula and the mix of the product, whatever it is, right? You don't need to know any of that. What you need to know is about business. Is there a way, and there's methodology about standard business practices suitable to any business. Like we talked about cash flow before, right? Cash flow's got three chunks. It's got expenses or efficiency. It's got inventory / work in progress or stock, whatever your method definition, and it's got accounts receivable. So you've got three levers, to drive cash flow, and it's just standard business. And cash flow management is the number one reason businesses fail or struggle.
Yeah, I think Dun & Bradstreet says 90% of businesses fail because of cash flow, not because of profit.
Yeah, 100%. Yeah, it's cash flow management. It's the ebbs and flows of cash flow. So as an example of a service that accountants can do on their ear, and the technology can help them do it super efficiently, another question I ask is, okay, what do you think the number one service is that your clients should buy that help them succeed? Every time it's cash flow management, forecasting, budgeting, cash flow, whatever you call it. Okay, cool. You all agree with that? What percentage of your clients have a live, working, and reliable budget and forecast?
Mm-hmm.
And the key is it's live, so it's active. Cloud accounting helps us do that. It's reliable, so we can actually forecast on it, and we can see. It's the number one tool that every business owner should have, and the accounting firm can provide that for them. But they don't.
And it also, I always thought it gives them an excuse to give them a call. Like you're talking about those gap meetings. If you look at your client and they're over budget one month, you can ring them up and go, hey, Rob, I've just noticed you're over budget on these accounts. If you want to talk about it, it's an excuse to call, isn't it?
Because, the vast majority of businesses are on a cloud accounting system, at least here in Australia, not so much in the USA and Canada, where I do a lot of work. The accounting firm has got access to that data. And so they've got access to real-time accounting, what I used to call the redundant data accountant dealing in old dead data versus the real-time accountant dealing in real-time data, right? Mm. And if there's a bookkeeper involved, it's pretty real-time, right? So, and they can look at that Xero or QBO or whatever, Mob Live, whatever it is, and go, wow, and actively look at it. Profit's down a bit for the month. Inventories or stock is up for the month. Payables are up for the month as well. I wonder how they're going cash flow wise. Quick question, quick call. Hey, I was just looking at accounting software and just wondering how cash flow is. Well, how do you know? Well, I just noticed that the profit was down, the stock was up, and the creditors were up. Just wondering how things are going. Hmm. And even if things are great, the client loves the call. It's simple stuff like that.
And I think as a client, as a business owner, Rob, you can attest to this. We're not that much worried about the past. We tend to have all our heads in the future, don't we? And that's where we're not really care what we did last month.
Well, and also as a business owner, they typically manage the business by the bank account, and not thinking and forecasting and really, and you're in the agribusiness, right? So you've got some massive ebbs and flows in cash flow, huge ebbs and flows, sometimes years, right? And with a bit of luck at the moment, as we record this, a drought has ended, at least on the East Coast, for the next few years. But it's the accountant desire to do that, then practically by technology, by meeting with the client, by having a cadence of meetings. Okay, we've got 200 business clients. How frequently do we contact them throughout the year, not associated with the work that we're doing for them? And let's make that 3 or 4 times a year. Quick phone call, Zoom meeting, or whatever, or text message. Just checking in. How's things going? May not eventuate into a meeting, but the client goes, oh, they're thinking about me.
Yeah, so you talk about building enduring relationships, Rob. Is this the sort of stuff you're talking about?
Yeah, but how do you build a relationship, right? You build a relationship by communication. You build a relationship by breaking bread, by having a beer, taking out for lunch, coffee, breakfast, whatever, by meeting, right? You build relationships by talking and meeting. So here's what happens. Client pays more, accountant meets with them more. Let's flip that around. Accountant meet more, client will pay more. So, because I know you've got a $100,000 client, you're talking to that client every week or thereabouts, right? Because you got the hotline. Yeah. What if you flipped it around? And not every week, but if you had and this is for every client that you want to keep, because some clients we don't want to keep, right? So this could be the 80-20 rule. 80% of the clients, we have a cadence of meetings, touch bases, and not a newsletter, no one reads, but it's a phone call or a text or a Zoom, a quarterly catch up. That doesn't have to be for too long, or a voicemail left. It doesn't have to even connect. It's just, I listen to it. Hey, just thinking of you, just touching base. Just looking at the accounts last week. If everything's good, all good, but if you've got any concerns, give me a call. You build enduring relationships by meeting and talking.
Yep. And it's just making an excuse to do that, isn't it?
Yeah, an excuse. Touch base. It doesn't have to be every quarter's fine. And having the technology to remind you, which can be done these days with good CRM technology. Haven't spoken to Rob for a bit, but give him a call.
So if you look at the rock stars, just to sort of finish off, Rob. So you look at a rock star firm. Tell me what they look like. So what's the? You just walk in and you can just tell straight away. What are they doing that the others aren't?
Yeah. So we say because we're coaching accounting firms and we have a criteria of who we coach and who we don't, right? And some of the ones that we don't, we say no to at the outset is because they're too good now. And we've got a 400 score, 40-point strategy roadmap. So answer out of 40 strategies, where are you at on the scale out of 10? And very few are over 300 out of 400. But if they are, we just say no, right? You're already doing some great stuff. So what those firms look like. First of all, the time per partner on the tools is low. The partners, I'm just thinking of one client I interviewed last week in the US. They're a $7.3 million firm, 2-partner firm. They've got about 30 people, profit of 55%. One partner does literally 10 hours a year of client work. One does 240 hours a year of client work. The partners aren't on the tools. So they've built a business that doesn't work without them, but it's not reliant on them turning up every day to do client delivery work. And that's a big, big thing where I look at some struggling firms and it's all about the partner. The client calls the partner all the time. The team members come to the partner for the words of wisdom and the training. The partner's doing the review. The partner's working a lot of hours. There's no leverage there. So I look at the really rock stars and the partner client time is super low, which means they've got leverage. The margins, I'll give you a number that I'll ask every partner to work out. It's a number I invented, and this is the indicator of how well this firm works. And the number is called profit time index. And so everyone's heard of the theory of work on the business versus work in the business. Spend more time working on. Michael Gerber popularized this phrase in 1986, would you believe, from the E-Myth. And the world has caught on to the idea, I get it, work on the business, not so much in the business, build a better business. And so we get them to measure every month how much on time versus in time, working on, growing, developing the business, working in, doing what the business does. And then we take that number in hours and divide that into profit for the month, profit time index. And it ranges from really low, partner time. So let's say a 2-partner firm made, $500,000 for the year, so 250 each. So 500,000 for the year, 2 partners, but the in time was 2,000 hours, right? So 2,000 into 500,000 is therefore $250. Super low because low profitability but high partner time. This number, profit time index, is the ultimate outcome number of everything you do to grow and develop your accounting firm. Where you see another firm, I've got a firm here in Brisbane, Australia, haven't coached them for about 8 years, but we spent 4 years together, $30,000 as a sole practitioner. So $3 million revenue, 1.8 profit, so 60%, sole owner, 1 hour a week in a management meeting. So if you call it 50 hours for the year. 50 hours into 18,000 is 1.8 million is 36,000. The rest of his days are spent growing, developing the business in a sales capacity. So the business, he does no client work, leverage that out, and he's running an awesome business. Everyone wins. You build a great accounting firm, right? And then there's 3 levels to this. There's level 1 is practitioner practicing. So you're a practitioner practicing your craft. Level 2, you've got a business. You've got a business that runs better than most. But level 3 is when you become an investor in your own business and it's not reliant on you at all, right? So Ray, for example, he's an investor level. I can't help Ray. He knows what to do. That business is rock solid, gives him tons of money, much money as he needs for lifestyle, and plenty of time.
That's brilliant, mate. So to finish off, Rob, so I always ask people at the end of the podcast, what do they do when they're not doing their core craft?
So I'm a golf nut. So I decided when I bought this property 5.5 years ago, I'd build a golf course on the property. The golf course was opened 3.5 years ago. Golf Digest magazine 2 years ago did a big article on it, 6-page article, and said this is the world's best backyard golf course, right? So we're going for that. It's in print. So on golf course, 27-hole configuration, clubhouse. So what people who are seeing is inside the clubhouse. And the back of the clubhouse is the wall of hats. And it's a visual goal to play the top 100 golf courses in Australia and the top 100 golf courses in the world. The Australian list, I'm 71 out of 100. The world list, I'm 33 out of 100. And the deal is, so when I play the course, I buy a hat and stick it on the wall when I've played the course. Now, the challenge here is every 2 years as the lists come out, about 10% churn out and churn in. And this is a formal thing. It's a globally recognized idea. Only 49 people on the particular registry that I follow, only 49 people in the world have done the World 100. Because the deal is your last putt, your list must be current. So that means the last course you play, you've got the entire current list. Oh. So you end up playing about 150 to 200 of the world's best courses. I was going great till COVID hit, of course, no travel. I've picked up 9 this year. I've got 22 booked up for next year already. And so we're well over halfway next year. So yeah, I walk past that every day. And all right, need to organise some more travel. So there you go. Visual goal setting.
Oh, there you go, mate. So COVID would have been frustrating for you.
Yeah, totally frustrating.
Now, mate, people. So, after what I've learnt today, there's going to be people that want to get hold of you if they don't already know you. You're a pretty well-known guy in the field. So, how do they hunt you down, Rob?
Yeah, just go to robnixon.com, robnixon.com. Go to free stuff. There's a lot of free. We can't help every firm, so we've got a lot of free resources on there. There's that 40-point checklist strategy roadmap. There's a benchmark report on there. There's a latest book on there. We'll put webinar recordings up live as well. So start there. And if that tickles your fancy, we've got, we only coach so many in Australia and so many in the US every year. Hit the apply now button and we'll have a chat and see if it help you out.
Good on you, Rob.
But start with some free stuff.
Oh, good on you, mate. Thank you very much for your time. I really enjoyed talking to you, and I hope everyone really got a lot of value from our conversation. Thanks, mate.
As always, if you'd like to know more about AgriMaster Farm Business Management Software and Services, you can find us at www.agrimaster.com.au or find us on Twitter, LinkedIn, Facebook and Instagram. If you like this episode, please share it on social media or directly with a friend, and let's make farm business great together.